Hello to everyone. Today I am here with Financial Statement Analysis Part-9. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. In the previous lectures, we have discussed about the key ratio categories and trend analysis. Today we are going to discuss about the cash flow statements. Cash flow statements, first of all, the total operating need. It's very important, and most of the time that part is ignored by the analyst. Here you can review that in case of a short-term area, first of all, you go for the net income for the all year. Thereafter, you will add back the depreciation expense that is considered to be the non-cash expense that will be added back in order to have the gross operating funds generating. Thereafter, we have the increase or decrease in the cash. For the second year, we have the decreasing trend, and in the third year, we have the increasing trend. Thereafter, we have increase and decrease in the stores and spares. We will find in both years we have the increasing trend. In case of stocks and trade, we have gained the increasing trend. In case of accounts payable, it's a part of liability side. So you will find the decreasing trend for the second year and increasing trend in the third year. Thereafter, loan and the advances, you will find increasing trend in second year and the decreasing trend in third year. Thereafter, you have trade deposit and short-term payable having the increasing trend. Thereafter, accrued return, decreasing trend in second year and the increasing trend in third year. Other receivable, you will find the increasing trend in both years. In case of a short-term investment, you will find increasing trend in the first year and the decreasing trend in the third year. Here we have the figure that is the total operating need. So, in some cases, we have observed the company show handsome profitability and good health of the company as a part of balance sheet, but their operating cash flows were negative. It means they have played with their financial. And the most of the analysts, they only relied on the balance sheet and the income statement analysis. But you should have it, keep in your mind, cash flow analysis sometimes considered to be the more important than balance sheet and income statement analysis because it highlights you the true picture of cash generated by the company and having by the company in order to meet their financial and other cash needs. So in this case, we can find the positive cash flow generated by the business and having no further need for any short-term requirement. Thereafter, we can observe the gross funds generated here are equal to total trade and other. You can find a positive trend, decrease in the unclaimed dividend, negative trend. Thereafter, decrease in unpaid dividend. There is an increase in unpaid dividend. It's in both cases. You will find in negative. Here we find the decrease in the accrued markup. Thereafter, decrease in the taxation and the total operating sources that comes. The figure is in front of you and the net operating cash generating equal to this much. So It's the continuation of first part. In the first part, we have calculated the total operating need. In the second part, we have calculated the total operating sources. And thereafter, we have calculated the net operating cash generated. So in this case, we are finding the positive figures. Thereafter, we have the capital expenditures. You can find a positive change in both cases. Dividend and adjustment in reserve, first is positive, thereafter negative. Increase and decrease in, you will find the increase in the investment, thereafter increase and decrease in other non-current assets, you will find the increasing trend, thereafter increase and decrease in the intangible. In the second year, it's negative, and in the first year, third year, it's positive. Thereafter, reduction in the short-term bank debt, you will find a positive reduction in both cases. So the reduction in long-term, here we have no figure for this change. The total net non-operating need comes in this case. Thereafter, we have to calculate the non-operating source that include, first of all, fresh capital and other net worth increase. There, in this case, we have no such figures. Increase other long-term liabilities. Yes, there is an increasing debt. Increase in short-term bank debt. For the second year we have, and for the third year we do not have. Increase in the long-term debt. Yes, in both years we have the figure. So it's the source for both years. On the basis of this, we will have to develop a reconciliation. First of all, net operating cash flow generated we have for both years. Thereafter, less the non-operating need. We have the figure. Thereafter, we have the source, non-operating source. So answer should be equal to 0. If your answer is not 0, there is some error in your calculation. So you should do the practice for such cash flow development while analyzing any type of the company. Now here we have a short overview related to the different ratios. Activity ratios, we are finding the increasing trend. Thereafter, inventory turnover, it's almost same. Payable turnover, there is slightly change. Now, fixed asset turnover has slight changes. Total asset turnover, there are slight changes. Debt to total assets, yes, there is a significant change. For the second year, and thereafter a major change in the third year. Total fixed debt to fixed assets, there are significant change. Debt to equity, there are changes. Debt to capital ratio, we can observe the changes. Gross profit, we can observe the changes. Net profit, we can observe the major changes. So return on assets, return on equity, return on capital, EPS. So overall, the company showing the improving trend from the point of view of the equity holders. Always when you increase the debt and the debt is utilized for the purpose of revenue generating assets, it will definitely improve your profitability and particularly increase the return on equity, because the debt provides the tax leverage. Tax leverage ultimately give benefit to all types of the equity holders. Thank you very much. See you very soon with the upcoming topic on banking and finance related